Nico Lechuga, one of the founding partners of Ego Death Capital. I started off my career in private equity, predominantly looking at companies in emerging and frontier markets. And this really like triggered in my mind probably of like a broken monetary system. I left PE to be an entrepreneur. I own a hot sauce company.
I actually wanted to ask about that. We could probably spend the entirety of this podcast ignoring Bitcoin and going down the hot sauce rabbit hole. But we're going to touch on that later.
But I've always enjoyed investing. What we all came to the conclusion was that there was the projects that all the VCs at that time period, is 2020, thought were going to be built on these altcoin ecosystems were flawed because they weren't decentralized and they weren't secure. And what they wanted to build based on some of the network upgrades on Bitcoin was going to eventually migrate over there. And that there was this asymmetric investment opportunity.
So it sounds as though you've largely historically and even today are focusing mostly on infrastructure projects, or I guess I would probably call them that, building on top of and in and around the Bitcoin ecosystem. One of the things that's transpired over the last, let's say, 12 to 18 months is the emergence of these Bitcoin layer twos. Do you have a view on layer twos? Do you find them a bit superfluous and unnecessary? Do you think that there is an investment case in layer twos? I mean, what are your general thoughts on this?
So I think they're super interesting. Like, we've looked at Alpen Labs, Citrea, Botanics, you name it. Like I'm the person that wants to have the conversation, just at the very least from like an intelligence gathering perspective. And I think like, I can learn something. Like, I hope that we go into all these conversations learning something. I think from the standpoint of, which ones, I think this is a winner take most market, if that's the case. So they're generally like, if you look at like ARK is trying to actually probably works pretty well with Lightning to help out Lightning. But to be determined like how that works out, what the revenue model is, the team is really fascinating. A lot of these other layer twos have sequencer components with them. And so with that, it really requires them to garner the majority of the market share. And so from our investment standpoint, I think that we have a highly concentrated fund. So in fund one, we'll basically have 10 to 12 portfolio companies. In fund two, we'll have the same amount of companies that will lead just at a Series A perspective. And we're more comfortable kind of sitting back and letting the market decide where those are going to be, and then probably coming in. Does that mean we could miss? Yeah, we could definitely miss one of these like early stage probably investment opportunities. But I would say like right now, a lot of it, I would say is fascinating from an academic standpoint. And there's a difference between the academic, like Alpen Labs just came out with a paper, I think in the last 2 weeks. It was pretty fascinating of the compression of transactions and I think on-chain footprint that would end up reducing the on-chain footprint potentially by like 80+%. The application of that from the standpoint of like making revenue for a business, like we'll see down the road. And so from our standpoint, I think I think the jury is still out and we're waiting to get more data.
I think that's a wise approach. The alternative to that is you could basically throw a whole bunch of small checks at a ton of these. And there are a lot of VCs that take that strategy. They develop a general thesis around a specific macro topic, and then they'll go and invest in 10, 12, maybe 15, just in that one specific vertical, and hope that one or two of them maybe turns out. Because I do think that there is an element of winner take all if you're trying to solve certain niches. I don't think that's the right approach because, frankly, a monkey could probably do that if you really wanted to. I mean, you're not really earning your 2 and 20 if you just generally follow a trend and throw money at everybody that's building in that trend. But maybe let me ask you this. What has you most excited about what's being built right now in the Bitcoin ecosystem? Or maybe rephrased in a different way, where specifically do you see development happening that you guys are looking to allocate towards today?
Yeah, so this is a fascinating question. I think there's themes that we go through, and so like those themes where we get to sit, we get the intelligence of those themes, basically from a builder standpoint and from an investment standpoint of like you're trying to meet minds. I would say from a technology standpoint, what we're seeing implemented more with certain interesting projects right now is DLCs, so discrete lot contracts. So the ability for you to engage in a bet with another individual in a non-custodial manner, and then based on a third-party oracle dictating that future state, like that bet would settle. What's really interesting about this, so the predominant use case of this is probably derivatives. So we have exposure to company LN Markets, which just released DLC markets. So if you think about like having, you could have futures bets with large trading institutions on Bitcoin and Bitcoin adjacent products. Like that is highly, highly interesting to me. And to the team. And then from the standpoint of like what that could do from a potential loan environment. So the other theme I think that users want some degree of yield on their Bitcoin. So you saw like Babylon launched and there was $1.2 billion of like Bitcoin that was already like locked.
Oh, it started with like $1 billion TVL, right? It was crazy.
Right out of the gate. And so there's a lot of these projects where, not a lot, but there's a theme of these projects right now of like Bitcoin yield. And what I think the hesitancy with projects to date is, in order to do that, it requires rehypothecation, or you giving up custody of your Bitcoin, which Bitcoiners are uncomfortable with. I think if there was a project that allowed you to attain yield on your Bitcoin in a non-custodial manner, so you maintaining custody of that, I think that's going to garner a lot of attention. So that's something.
So that sounds like the holy grail, right?
Yeah.
Because I've seen a couple of projects out there that claim that they have something not exactly like that, because they all have some element of custodial to a certain extent, or you're depositing them in a smart contract or something along those lines, right? And okay, fine, it's still non-custodial, but what the hell happens if your contract gets hacked?
Yeah,
you know, it's still taking the trust to deposit your Bitcoin somewhere where, it still might be non-custodial, but there's massive counterparty risk. There's massive technology risk.
Yep.
Is there a world where you can see, and it's somebody infinitely smarter than I am is going to have to identify it, right, or build it? Is there a world where you can see pure non-custodial Bitcoin yield?